All right, welcome back to Stock Tricks with Nick for this week's Breakout Watchlist. In this video, I'll be covering 10 stocks that have breakout potential in the upcoming week. First, we'll use MarketSmith to break down each stock's fundamental factors, including their earnings, sales, and profit, along with group strength, fund ownership, and relative strength. Then we'll take a deeper look into each chart to find our entry point. If you enjoyed the video, please leave a like and subscribe to the channel. I make a Breakout Watchlist video every Sunday and go live on Tuesday nights. And quick disclaimer before we start, this is not financial or stock advice. This is for educational purposes only. Trading does come with financial risk. Please just do your own due diligence. And with that said, let's get into the charts starting now. First, we have ARBK, and this is a stock that I'm not seeing many people talk about, but it is a United Kingdom-based cryptocurrency company that provides crypto asset mining services, which right now, crypto has been a very hot sector, so it's good to take a look at the stocks that make up that group. It's got a group strength rating of A, Computer Software and Financials, which is the 21st out of 197 groups based on relative strength right now. The stock itself has only a 49 relative strength. That's because it just IPO'd, not much data to work with, and not over kind of its IPO close right now. Or I guess it is over that, but not far extended, not much data to use, relative strength rating of 49. Because of that same reason, composite rating of 84, doesn't have accumulation distribution ratings right now. Taking a look at fund ownership, we only have 1 quarter to work with, got 3 funds in. Again, just earlier on in the process, not too much information, but we do have earnings, sales, and profit margins. Let's take a look at that. Earnings the last 4 quarters, year over year, were plus 200, over 1,000, over 1,000, over 1,000%. When you see these triple nines on MarketSmith, it's a great sign that earnings are growing quickly. Taking a look at sales, plus 88, plus 212, plus 213, and plus 386. We have acceleration of sales. And then after-tax profit margins, plus 12, plus 23, plus 23, and plus 67%. Very strong. Taking a look at the daily chart here, we did go from high to low here about 35%. Had a pullback, bounce, pullback again. And what I really like here is on Friday, we undercut the low in the pullback, undercut the 20-day moving average, and then rallied up to close back above the 20-day, back above the 8-day exponential moving average, and near the high of the day. So with this, a couple different ways to trade it, just with the break over Friday's high, 1759 as a potential buy point, or Thursday's high, 1782 through here. The only downside with this is because it is such a volatile name right now, where you put your stop is going to be pretty important. We can't just put it under the previous day's low because that's going to be a stop of 7%. Maybe some people are fine with 7% stops. Typically 5%, even 3% is what I'm going for. So what you can always do is drill down and do like a 60-minute candle chart, 15-minute candle chart on these IPOs. Try to get a tighter range to measure against your stop. So maybe through here, a stop over under, let's see, 1684, that'd be about 4% stop. And you can see the volume shelf here. If we get over that, that's a possible buy point. So good group, good setup right now. Nice shakeout on Friday, and then we set up. Only downside is where you manage your risk against. Probably going to be an arbitrary 3 or 5% stop on the chart here. So this is ARBK. Next we have ASAN. It's got a group strength rating of A+. It's in Computer Software Enterprises, which is 16th out of 197. Within that group, it's number 1 on a relative strength basis out of 115 stocks. It's got a relative strength rating of 99. That's the highest MarketSmith gives. And composite rating, 30 out of 115, still up there. Taking a look at fund ownership, that has increased from 55 last September to 344 this September. So big money is flowing into the stock, and you can see that with the nice strong uptrend here. Composite rating, 72. Accumulation distribution, A-, so on the stronger end there. Composite rated is a little bit weaker, and if you look at the earnings per share, you can see why. We still have negative earnings. We still have negative profit margins year over year, but sales are increasing, plus 55, plus 57, plus 61, and plus 72. So if we can get profitable, that would be obviously ideal for ASAN, but it has nice earnings, nice accumulation distribution, and fund ownership increasing. Zooming out on the chart, you got the 200-day, 50, 28 all in the right order. You can see the nice, very strong uptrend that this has been in. There was a couple points to buy in down here, but then it got extended. Had this kind of malfunction day. I actually got stopped on my trade from down here on this day, on the last piece that I had. Since then, it bounced up, pulled back, and now we're having our first test with the 20-day moving average or 21 EMA, whatever you use. It's going to be around the same green line here. So with that and the 8-day starting to pull in, we want to see some price contraction here. This might not be ready for Monday or Tuesday because I would love for it to trade sideways and tighten up both price and volume wise. You can see ATR, average true range, starting, ATR is still extended. So if that can start to tighten up, those daily bars get tighter and tighter, then we can manage our risk better. But this is a strong name that is testing the 20-day moving average, 21 EMA, whatever you want to use. So looking for a break over 135.24, the high from Thursday, but again, ideally in the second half of the week after we tighten up a little bit. This is ASAN, ASAN. Next we have HAYW, Hayward's Holding. This is a stock that I got in a couple times through here, got shaken out, and then finally it dropped under the 50-day, based out, and now we're climbing the right side of the base, and I'm getting interested again. It's got a group strength rating of B+, 59 out of 197 right now in that group. Within the group, it's 11th strongest out of 14 on a relative strength basis. You can see 77 relative strength on the weaker end, but again, we're just starting to come up the right side of the base here. Composite rating, 8 out of 14. Taking a look at fund ownership, that has been increasing, 81, 156, 165, which is good. Already had their earnings, so that is out of the way. Nice, strong earnings, plus 800, plus 420, plus 175, plus 200, all year over year. Sales up 42, 96, 66, 56, so 4 quarters of sales, over 50% year over year. And then earnings, plus 8, plus 11, plus 14, plus 14, very strong there. Composite rating, 90, accumulation distribution B, group strength B+, we covered that. So here we had a nice strong move, 59% or so, drifted higher, and then everything got choppy through here. We broke under the 50-day, bounced back up to that, found resistance there, and then started basing out. Now, recently we've started putting in higher highs, higher lows as we've climbed the right side of the base. We did have earnings, got that out of the way, consolidated, popped a little bit, and now you can see Friday's candle, very, very tight, not much action moving, and we have a pivot to work with. So a break over 24.52 is the area that I'm watching, and managing risk against that, either stop under Friday's low, that's only 1.5% risk, but if you do Thursday's low, that would be 4% risk there for HAYW. Next, we have Lending Club, LC. This has got a group strength rating of A. It's in financial services, which is the 20th strongest group out of 197. Within that group, it's the strongest stock, or maybe tied for the strongest on a relative strength basis with a relative strength rating of 99. Number 1 out of 60. Composite basis, 8 out of 60, still very strong. Taking a look at earnings, sales, and after-tax margins, they were negative the first 2 quarters of the year, or the first 2 quarters of the last 4, and then enter June, we have plus 208 earnings per share, plus 416 sales, and plus 29% year over year improvements there. And then recently, we did get this power earnings gap up, and on earnings plus 400%, sales plus 253, and after-tax margin plus 30%. So very strong fundamentals. It's got accumulation distribution rating of an A+, composite rating of 95, group strength rating of A. Obviously very strong, but it did get extended here, and now we're starting to pull back. So let's jump to the chart. So here you can see the day before earnings, or the day of earnings announcements, this pulled back 8%, probably took a lot of people out of that trade going in, and then was up, 35%. Very, very strong earnings reaction. Next day we got follow through, third day follow through, and now we've gone through just a 4-day gentle pullback, still not even at the 8-day exponential moving average, but look at how light volume has been on this pullback. This is a very strong name, market leader that I want to find a way in. I don't have a position in this yet, full disclosure there. I'm looking where I can find an entry point. So this might just be a place where I put a smaller position size on, but I'm trying to build up and manage my risk against that. So looking for a break over Friday's high, 47.17 as a potential buy point. Let's see if we can find something on a smaller time frame. I don't think we will. Yeah, not just yet. Maybe this does trade sideways or down for the first half of the week. We test that 8-day exponential moving average. And then we could find a lower entry point to manage risk against. But for now, because I'm making this on Sunday, looking for a break over Friday's high, 47.17 in this market-leading LC lending group, stock. Next, we have MGTX. This is a biotech, so not gonna have too much fundamentals to go off on this, but really quick, the group itself right now is a B+ group strength rating, 63rd out of 197. Within that group, top 10% relative strength, it's got a 90 relative strength rating, 76 out of 769 stocks. Composite rating, 48 out of 769, so stronger there. Fund ownership increasing, going from 168 last September to 226 this September. Earnings not there, sales not there, and not anything there to talk about. So let's jump over to the other chart. So I do want to point out, E-Trade had this as unconfirmed earnings on the 9th. I haven't been able to find any information about that. So if you know and you have found out when earnings are for MGTX, let me know in the comment section. That would help me out. I'm going to do some more research later on in the day to get that drilled down, but very good volume coming out here. Let's measure that move, 70% or so. Doesn't have to be perfect. We go through a pullback under the 8-day. Buyers are stepping in, lots of longer, lower wicks here. So we pushed down, buyers stepped in, propped it up. Now we've just been trading along that 8-day exponential moving average. As price is starting to tighten up, volume is starting to tighten up, very little volume. And then on this, I'd be looking for a break over Thursday's high, 21.38 as a potential buy point, MGTX. So we're halfway through. If you guys are enjoying the video, please leave a like and subscribe to my channel. And let me know in the comment section if I haven't covered a stock that you think has breakout potential. If I'm helping you out with 10 stocks, you guys can help me out in the comments too. I'm still doing my research for the upcoming week, so drop them in the comments. All right, next we have MTDR, Matador Resource, A+ group strength rating. It's an oil and gas, which is the third strongest out of 197 groups right now. B+ accumulation distribution, 99 composite rating, 99 relative strength rating. So strong group, strong relative strength, strong composite rating. Take a look quickly at earnings. We went from -31, +255, plus over 1,000, plus over 1,000. Sales, -22, -28, and then reversed, +468, +132, and then after-tax profit margin, 14, 32, 34, and 32. Taking a look within its group, it's the number 1 stock out of 57 on a relative strength basis and 1 on a composite basis. Fund ownership on this has been increasing as well. 321 last September, then 351, 403, 456, and 474. So nice consistent growth in fund ownership for MTDR. Taking a look at the chart here, we did have an 88% move from the low in the base to the peak. Since then, we did go through a 3-day kind of pullback, 14% there after earnings, and then we had a nice pop, pullback, pop, and then inside day on Friday. I love inside days that finish higher up in the previous candle because it does show good relative strength, but price disagreeing is becoming less and less. Ideally, you get an inside day with very little volume. That just means no one was interested in disagreeing about the price. All the people that wanted to take profits on a 70-80% move have done so in this 14% pullback, and now we have the stronger hands left in the stock. And then if this does get going, then you can bring in the new swing trading hands as well. So with this, looking for a break over Thursday's high, 44.11 as a potential buy point, and then a stop under Friday's low would be 4.5% there. MTDR. Next we have PERI, PERI Network. This has got a group strength rating of B-. It's in computer software and media, which is 94 out of 197, according to MarketSmith. Right now, strongest on a relative strength basis and a composite basis out of the 18 stocks that make up that group. 97 relative strength, 95 composite rating. If you've seen my videos before, you know when we compare both 90s in composite and relative strength, it's usually a stock to keep an eye on. Also has an A- accumulation distribution rating and has this earnings pop, and now we're consolidating a bit. Taking a look at earnings, we have earnings up 41, 12, 371, and then 90 year over year. Sales up 51, 36, 82, 45, and after-tax profit margins up 12, 8, 11, and 13. Taking a quick look at fund ownership, that is increasing, 38 last September to 77 this September. This stock is very similar to LC, where it's a market leader. We had a power earnings gap, giant volume coming in on a really strong earnings report. Let's see what we were up that day. 31% that day. We had a quick 2 or 3 day pullback, gapped up last Monday, pulled back, and now we're still pretty volatile here. People are taking some profits. People are starting new positions, getting shaken out as it comes back in. That was me on on this day when we pulled back in, I had my stop at the low and then got stopped the next day. That's fine. Still consolidating here. If we can lower the volatility in these daily bars, get ATR to kind of stop this uptrend and actually reverse lower. So the tighter those daily bars can get, then the tighter stop loss we can use, the larger position size for the same amount of dollar risk. With this, I would love this to be a second half of the week trade where maybe the market itself is kind of extended. That goes through just a short pullback, blow off a little bit of the steam here, and then we can set up lower around the 8-day exponential moving average. But for now, again, just coming in on Sunday, looking at 29.74 as a potential buy point here for PERI. Stop at the low, the 8-day exponential moving average would be 6%. It's a little bit higher than I would like. Again, would love this for the second half of the week for PERI. Got 3 more for you. Next is SD. It's Sandridge Energy, A+ group strength rating, and oil and gas. Again, that's the third out of 197 groups. Within that group, it's got a 99 relative strength rating, so it is tied for first on a relative strength basis, but then middle of the road when it comes to composite rating. It does have a composite rating of 94. So the fact that that's a 94 and it's middle of the road in this group just shows you how strong the group it has been recently. So 99 relative strength rating, 94 composite rating, A+ accumulation distribution, going through a little bit of pullback after its peak, really lining up a bunch of things that we like to see. Earnings, plus 131, 151, 324, and 314. Sales had been negative the first 3 quarters here, minus 53, minus 49, minus 17, and then positive 105 in June. And then after-tax profit margin up 20%, 7, 52, and 48. Taking a look at fund ownership, we did dip from December 2019 down to the low in December of 2020. Since then, we went from 64, 83, 90, and 90. And chances are this got taken in September. We've seen some big volume bars as this climbed higher. Chances are this will be larger in the December snapshot. This is SD. So zooming out here, very strong uptrend. You got the 200-day, the 50-day, the 20, and the 8 all in the right order. We did have a very, very strong move, 200% up, pulled back 25%. So it does qualify for the high tie flag setup. Since then, we bounced, 25%. Went through another pullback, and now we have a 3-day pivot to work with. The high points of the last 3 days, right around the same price, not exactly the same price, but looking for a break over 13.25, the high from Wednesday to work with. I really liked Friday's candle where we opened, we shook out the lows in this pullback, we shook out the 20-day moving average, then we reversed higher and closed high, plus 5%, and just above the main part of the volume shelf. So more clear skies above. We already tested this and buyers stepped in. So looking for a break over 13.25 as a potential buy point for SD. Not to be confused with SD, the next stock we'll talk about is SEC Limited. This has got a group strength rating of A-, 44 out of 197. Within the group, it's got the 6th strongest relative strength rating of 91 out of the 70 stocks that make up the group, and a 10th out of 70 on a composite basis. It does have a composite rating of 69, which is lower because we don't have positive earnings yet, but taking a look at sales, plus 99, plus 102, plus 147, and 159. So we do have acceleration of sales. We need to figure out profitability. And one thing I wanted to point out, earning is in 9 days here. For some people, that's fine to trade that close into earnings. For some people, if it's within 2 weeks, they won't trade it. So just a disclaimer, this has 9 days until earnings. I'll take a trade 9 days from earnings, but you do have to manage that going into the earnings. Unless you have 10% profit or more, I don't hold into earnings. That's just me. Taking a look at fund ownership on this, we went from 857 last September to 1847 this September. Very, very strong. Lots of funds flowing into this stock. Zooming out, we got the 250-28 on the right order. We had this nice downtrend line break, and I actually did take this trade through here, broke higher, pushed up, and then when we took out this low, I just took the trade off for now. But now that it's starting to consolidate, looking to add it back on. I really liked how it reacted here. Well, I didn't like that it pulled back this quickly to the 20-day moving average, but look, 1, 2, 3, 4, 5, 6 days. Buyers were stepping in right on that 20-day moving average, providing support there. Now that you have that moving average coming up and you have the 8-day closing in, The daily bars are getting a little bit tighter. You can see average true range starting to tighten up here. We have a good risk reward with Thursday and Friday's high. That would be 361.50, and a stop under Thursday's low would be just 3.2%. To be a little bit safer, because we know for the last 6 times that we've tested, buyers have stepped in. I might try to put my stop a little bit below the 20-day moving average. So to give them that option to buy at that point, kind of support it. 4% stop there for SE. And last but not least is UROY. I have not seen anyone else talk about the stock. It is on the cheaper end right now, only trading at $5.29. So if that's not for you, that's not for you. You got to stick with what works in your trading strategy. But I did want to talk about this because uranium had been hot for a couple weeks, cooled down a little bit, and now it looks like it's setting up again. This stock has a group strength rating of B+, 51 out of 197 within the group. It's 5th strongest out of 14 on a relative strength basis. Got that relative strength rating of 96, but is weaker on a composite basis, a 65 composite rating, just because we don't have any earnings, sales, or after-tax margin to really talk about here. Did just IPO, so we don't have too much information, but fund ownership is gradually increasing on this one. All right, taking a look at the chart, we had this nice, very strong move up 144% from the low here on pretty heavy volume, but because it's a cheaper stock, it got moved around a lot, minus 36% on the pullback. We got extended again, so that's starting to make this little cup pullback, and I really like the shakeout here where, let's see, what day is this? The 29th of October. We shook under the 20-day moving average, really took out all the weaker hands, consolidated for a couple days, then moved higher. Did not see this stock in this move, so didn't trade it myself. Pull back again to the 20-day moving average. Now we're starting to tighten up a little bit. Still kind of volatile. Again, only trading at $5.29. Not for everyone, I understand that. But what I would like to see is a couple more days where this trades sideways, tightens up the range, and then we can use Friday's high, 547, as a potential buy point. Stop under the 20-day moving average would be 7%. Again, still volatile. So manage your risk with position sizing, or if you can get a tighter stop loss using a 15-minute candle chart, anything like that. This is UROY. All right, that's going to be the breakout watch list for the week. If you enjoyed the video, please leave a like and subscribe to my channel. I'll see you guys on Tuesday night for another live stream. Have a great week.